Well, welcome everybody. This is Q&A with HPK Provident Advisors, and this is our weekly Facebook Live. Every week, Friday at 12:30 p.m. Eastern Standard Time, we jump on the airwaves here, talk a little bit about the markets, and then just give you some general financial planning ideas. This is July 22nd, 2022, July 22 of 22. Truly one of my favorite parts of the week. Now, my favorite part of the week is meeting with our valued clients, but this really comes in as a very close second. We will remind everybody this is for informational purposes only. These are not specific recommendations for your situation. You'll need to work with your qualified financial professional, qualified tax preparer, estate attorneys for things along those lines. So this is just general information. We want to let you kind of know what's going on in the market. So no specific recommendations here. This is for informational purposes only. I'm going to talk about the headlines. I'm going to talk about the headlines after Mike talks about the market a little bit. So stick around. I've got some really interesting insights on the headlines of the day. You will recognize all of them, and I'm going to give you a little bit of perspective and maybe one way to think about what's happening in the world. Kind of seems like a mad, bad place. Speaking of a mad, bad place, Mike, talk to us a little bit about the markets. What was going on this week in the markets, and what thoughts do you have for us?
Yeah, good to have you back, Brian. So markets had a really nice rally this week, and that was kind of on the heels of that retail report that we got last Friday, and hope that that high CPI, that inflation number last week, will be the peak. On a technical basis, we are seeing some signs of improvement. We had very strong breadth on Tuesday with 14-1 stocks advancing versus declining. So that's something we really want to see. We've also seen a pretty big outperformance of those growth stocks versus defensives. And that's really opposite of what we've been seeing recently in both downtrends and any up rallies that we've had. It's really been the defensive far outpacing the growth stocks. So that's also good. It shows people's risk appetite is growing a little bit. And overall, if the current levels hold and we don't break down below, I think we could see another 5% or so until we hit a more substantial resistance line. Mm-hmm. On an economic front, it was pretty light. We got some housing data out, which showed further slowing, but that's not surprising with how high interest rates and home prices are currently. The Philly Fed Manufacturing Index fell for a fourth straight month, and then initial jobless claims, which comes out weekly, trended higher for the third straight week. So that's kind of a leading indicator for the monthly jobs report we'll get in a couple of weeks. So we have been seeing a lot more companies announce hiring freezes, especially in the technology sector. And we've had a couple of companies come out and announce that they're actually going to cut their workforce. I think Ford was the latest with a couple thousand layoffs. And I think Microsoft had an announcement a couple weeks ago in a similar amount. Internationally, we got a second prime minister resigning this week out of Italy. So we had the UK, Boris Johnson resign, what was it, last week or the week before?
Yeah, I think it might have been the week before, yeah.
So that's something you don't see too often. On other ECB news, they did raise rates for the first time since 2011. They raised 50 basis points. I think that range is now negative 0.25 to 0. So you think the Fed's behind the 8 ball? I mean, that's hard to wrap your head around. And they have a tough job because their rate hike policies are for like 19 countries, and they all have very different economies.
Well, very different indeed. Of course, the ECB being the European Central Bank, that's the equivalent of the Federal Reserve, and they do have some challenges. And you're right, Mike. Each of those economies has different specialties. They have completely different cultures in a lot of those. So they've got a big challenge. And it is interesting that we've had a few prime ministers. We're going to have to see how that plays out in time. And that's great stuff. And we certainly appreciate that, Mike. Now, you had mentioned last week, I believe it was, that the earnings, we're kind of into earnings season. We had a lot more companies reporting. And that kind of helps you to determine, kind of get a pulse on how things are. And so how's the earnings season's been so far? Has there been any weakness? So if you can expand on that a little bit.
Yeah, absolutely. So far we've had somewhere between 10 and 15% of the S&P reporting so far. Um, from a market cap perspective, it's not nearly that high. We haven't made a dent so far in terms of market cap, but overall they've been pretty mixed so far. We've had some companies reporting supply chains are getting a little better. It seems chip availability is a little better. Demand's been intact so far. They're pretty optimistic that the decline we've seen in commodity prices, if it continues to stay at these levels or trends lower, it should ease some of those inflationary pressures in coming months and quarters. However, many are concerned about slowing demand later in the year, as well as the impact that strong dollar is having. So overall, earning estimates have been they've been beating estimates for the most part, but below the average amount that companies usually beat by. So we're on pace for about 5% earnings growth this quarter. That's not far from where they're initially anticipating. The real question is, I think right now most analysts are forecasting an uptick the next 2 quarters, closer to 10%, and a lot of that comes on the mindset that margins are going to expand back to peak levels. And that's still kind of hard for me to wrap my head around with the potential for demand and spending slowing. So we'll have to see on that. But anyways, next week we'll get some of those big tech heavyweights. So that could really affect markets and the overall pace of earnings for the quarter.
Right. Well, so then overall, so far, not so bad.
Not so bad. Not as bad as people are thinking.
Okay. And so that's maybe a little green shoot of some good news there. Now, Mike, you have been a little bit more on the cautious side. And philosophically, I would say that's kind of where the portfolio management goes here. Generally, a little bit more cautious. Has your opinion changed yet?
Honestly, not yet. I look at the rally that we just had, and although we had some improvements on the technical side, I just asked myself, has anything really changed fundamentally from a week or two ago? And the answer to that question is no. We're still at record high inflation. Retail sales are hanging in there, but it's not inflation adjusted. So people are still spending, but they're buying less goods. That's going to affect companies and having to do inventory write-downs, which in turn will affect overall GDP growth. So bottom line, we are in an economic slowdown that's going to continue to be pressured by a very, very aggressive rate hike schedule. I don't like to fight the Fed, as they say, on the way up. I also don't like to do it on the way down. So I don't think we're out of the woods yet. We're getting closer, but I think some more things need to happen first. And even if inflation does come down, it's still going to be high at pretty high levels. And if it comes down substantially, that probably means that demand really deteriorated. So there are some encouraging things, like I mentioned, the commodity markets rolled over, which should especially help that headline component. Everything except natural gas that's been on a tear the past couple of weeks. I think it's up like 45, 50%.
It certainly has. It certainly has. All right, excellent. Anything besides, you mentioned they got some of the big heavyweights on the tech side. Anything else coming up in next week that you kind of got your eye on? And, Mike will take a look at it and we'll talk about it next Friday. But anything else coming up next week?
Yeah, we'll have another FOMC meeting. So Jerome Powell will speak on Wednesday. And I'm very interested to see what he's expecting out of the economy in the second half of the year and into 2023, and how his impression of rate hikes are going to play into that, and if he has any change in where he sees the Fed funds rate, the terminal Fed funds rate. That's the rate where they'll start to pause or kind of come back and do rate cuts. So I'm thinking we'll probably get 75 basis point hike this meeting. I think it's unlikely that we'll get 100, especially after we had another PMI number come out a couple hours ago. It's not the ISM one, but we saw a lot of weakness in the service sector, which was a big surprise. So I think we're more likely to get 75 this time. And then there's no meeting in August. The next one will be in September. So I think 50 is most likely. It's possible we get 75, but it's also possible we get 25. A lot of data is going to come out between now and then.
Right. Does anybody actually listen when Jerome Powell speaks?
I do.
as in everybody in the world listens when he speaks. So I guess they're on vacation in August, like a lot of folks are. Speaking of taking some time away from the office, if you will, the entire HPK Provident Advisors team is going to be in Denver at the LPL National Meeting next week, which we're really excited about. A ton of great content. This is where we go to kind of, bad analogy, but to sharpen the saw. We listen to a lot of industry experts across all of financial planning. Mike's going to spend a lot of time listening to in person, speaking to market pundits and that kind of thing. So we're going to come away with a ton of things that we'll be able to apply to our clients' situations.
Hey, Brian, are we going to have a Friday Live next week?
Yeah, I think we are. I think we're going to try to sneak that in. Keep posted on the on Facebook, though. We're going to attempt to do that. We will be out of the office until Thursday. But if anybody needs anything, certainly give us a call. The phone rings right to our cell phones, and so we'll be available, and we'll keep you up to date on the Friday Live next week. The way the airlines work, who knows if we even get back to Denver on time. Or from Denver on time. So, it's really tough to say.
I particularly have a very poor track record of flying. I've spent many nights in random cities.
Well, everybody does at this point with the delays and the cancellations and that kind of thing. And so, Mike, this is tremendous info. And I would say to everybody the basic concepts of investing and doing your financial planning have remained the same. Those concepts are save as much as you can, as often as you can. Have a goal for your dollars. And you can have different goals for different dollars. Some are long-term, some are short-term. So save as much as you can, as often as you can. Have a goal for each of those dollars. And give yourself as much time as possible to reach those goals. That hasn't changed, but what has changed, I believe, with the flow of information and technology, and everybody can get all the market data they need right on their phone in real time. The inflection points have changed, and so that's why it's really important that we have Mike here to look at all of those data inputs to understand, to try to interpret the trends and that kind of thing. Because the inflection points, how quickly the market moves in different sectors and regions and stocks, bonds, and those types of things, those inflection points happen really, really quickly. So it's important that we look at these every week. It wasn't so long ago that, hey, catch up on the markets once a quarter and that'd be fine. We could kind of figure it out. But Mike, we really appreciate you keeping your eye on these things literally all day, every day. It's tremendously helpful, again, because things do change so quickly these days.
They do. I love it.
So I wanted to talk a little bit about the headlines, if I could. Mike, you up for some headlines? I made some notes here. All right, so headlines. Right now, we've got the oldest president that we've ever had in the history of the country. Good, bad, or indifferent, but some people have their thoughts on that. But the headline is, we got the oldest president we've ever had in the history of the country. Another headline is inflation. Mike, have you seen anything about inflation? Maybe people have heard about it. It's just got to go get inflation. Whoa, off the charts right now. Huge headline. We've got Russia running through Europe. And many people are wondering, does that lead to something bigger? What does that mean? Do we have strong enough leadership here to address what Russia is doing over in Europe? And so that is top of mind for a lot of people. We've got an economic superpower in Asia that is, depending on who you talk to, taking all the jobs, or undercutting all of our companies on pricing. They make things cheaper and faster. They got a huge real estate boom going on, and you see a lot of these ultra wealthy folks from this country over in Asia that they're buying big properties in New York City and San Francisco, and then we've got this new virus, and do we have our arms around this? What does this lead to? how are we going to address it? How long is it going to go on? How will it affect the economy? Those are the headlines, and I think we could all agree to those. I got the oldest president that we've had in the history of the United States. Inflation is just crazy. Russia's being problematic in Europe. We got this Asian superpower that is just becoming economically very influential and taking jobs and things along those lines. And then we got this virus that we don't really, probably don't have our arms around it right now. So with all of that said, and Mike, I think you would agree, those are kind of top of mind things for a lot of folks, and that's what you'll see when you go online and check out the news. So with all of that said, why would you invest right now? Why would you try to move? It is a crazy world. And so many people say to us, this is not a good time. The country is very different. We may never get on track. This is super problematic. So I'm going to sit on the sidelines. Well, here's what's interesting about all the headlines that I just read to you. Oldest president, inflation, Russia, Asian superpower, a virus going around. All of those headlines that I just expressed to you are from 1981. See, because in 1981, Ronald Reagan was the oldest president that ever been elected in the United States. Inflation was out of control in 1981. For those of you listening, you remember maybe you had your first mortgage, you were buying a car, your mortgage was 13, 14%. Inflation was crazy in 1981. In 1981, Russia was in Germany. That was the East-West Berlin situation. And we all sat around in 1981, I remember, and said, what does this lead to? I mean, we literally have a contentious Russia across the wall from United States allies, and everybody had soldiers on that wall. So in 1981, we were all worried about what Gorbachev was going to do. Was he going to bust through that wall and try to take over Germany? What was going to happen? It was very, very worrisome in 1981. The country that I mentioned, Asia, you were probably thinking when I was talking about that headlines, you were probably thinking about China. Well, in 1981, that was actually Japan. I remember my first Walkman in 1981, turn it over and said, made in Japan, right? They had a huge real estate boom. Everybody was investing in huge properties and buildings in Japan. And then they took that wealth and they brought it to the United States, and they were buying huge penthouses in New York City and whatnot. Everybody was commiserating in 1981 about how Japan at that time had taken over the steel industry and how that was affecting us. The virus in 1981, I mentioned there's a virus going around, and right now it's COVID. Then in 1981, that was HIV. HIV was first identified in June of 1981. I do remember going to the local mall in Washington, Pennsylvania, where I grew up. Their water fountains were more common then. All the water fountains were covered with plastic tarps and that kind of thing, because nobody could figure out what this HIV was, where it came from. And you saw celebrities were contracting. It was, oh my gosh, how are we going to get this under control? So all those headlines that I just read to you, although they are applicable today, the headlines I was talking about were in 1981. In 1981, if you go to your Sherman and Peabody Wayback Machine, go back and remember where you were in 1981 and how it felt off. It really did. We had an untested president. We had inflation. We had a country taking a lot of our jobs. We had Russia running amok in Europe. We had this virus going around. In 1981, why in the world would you have invested your money? Well, in hindsight, it's 2020. In hindsight, 1982 from 1999 was one of the greatest bull markets in the history of the United States. And in 1981, there would have been absolutely no good reason to move your financial life forward because of those headlines. And it feels very similar today. I'm certainly not predicting that we're about to embark on the greatest bull market in history next year and the year beyond. I don't know that. What I do know is in 1981, probably sat on cash and put it in the mason jars in the backyard. So investment concepts have not changed. Save as much as you can, as often as you can. Give different pots of money a goal so you know what its purpose is, and then give yourself as much time as possible. And we would say seek out a qualified professional, financial planners, and work with folks that have insights on the market and what your portfolios can do for you, like Mike. So that's what I want to talk about a little bit about the headlines. Anything else for us this week?
No, that's amazing. I mean, it really sounded like you were talking specifically about where we're currently at. But what's that? What's that quote? Who's the Mark Twain? History doesn't repeat itself, but it often rhymes.
That's exactly right. And so much has happened between now and 1881. But I do remember it. I do remember relatives that were losing jobs in the steel mills and inflation, and nobody was really sure about this new president and what he was going to be able to do. So, hey, I don't know. That's just a little bit of perspective for everybody. All right, so I'm going to wrap it up for Friday Live of July 22nd, 2022. We really appreciate everybody joining us. There will be a recording of this, of course, on Facebook and other social media platforms. Keep posted on if we actually get back in time from Denver next week as to whether we'll have a Facebook Live. But most importantly, be safe. And if you have any thoughts or questions, just give us a call. HPK Provident Advisors, 724-463-1331. That number is for each of us here at the firm. So everybody be safe, and we'll catch up with you real soon.